VCs are sitting on a whole ton of cash, some of them. I think of A16Z in particular when it comes to crypto. Why aren't they putting money to work in some of the projects?
Yeah, well, thanks for having me here again, Caroline. Well, first of all, this is not really a symptom specifically in crypto. It's more of the broader venture markets. So, we track investments across the entire venture ecosystem, and it's down for Q3 as well. So you're seeing that the same thing. So what you're seeing in the crypto space is basically what venture investors are doing. They're taking the time to talk to founders. They're taking the time to understand what the business models are, how they're operating, and then they're going to slowly deploy capital. We talked about this last time. Just the pace of investing and the process of investing has been much, much slower. I think with crypto, the unique aspect is there's still regulations that they have to think about, right? And then it's really nascent. All the technologies that are being built is very nascent. So I think that is part of the slowdown too, is specifically in crypto, is those two things.
Let's talk about some of the regulatory questions, because actually many, I'm sure, who will gather around their Thanksgiving table this month will say they had some big wins when it came to the SEC sort of unable to enforce the way in which they thought they were. The fact that they lost initially against the grayscale element of it turning into an ETF. It seems that they've dropped their issues with Ripple in particular. Does that spell that the SEC isn't going to have as many teeth?
Yeah, honestly, we think what's going to happen is that the SEC is going to inevitably approve some of the things that are happening in the space. So first, we think the spot Bitcoin ETF is going to get approved in the next few months. And now we just saw last week, BlackRock is applying for a spot ETH ETF as well. So we think those things are going to help the crypto space because it's going to increase the liquidity in the space. I think right now we're in a liquidity constrained market, so a lot of the products don't really work well. Lending markets, credit markets are not working as well, especially in the DeFi space because of the lack of liquidity. We think that, as the SEC is kind of have to force to play its hand to really look at these products, and if they do reject, they have to give a really good reason. And right now, we haven't heard any good reason that the SEC is going to give for not having any of these exchange-traded products on the market. They've already allowed a Bitcoin exchange futures on the market. And so, you look at what BlackRock is arguing in their filing is that, look, these things are going to be correlated to the spot markets no matter what. They're priced, the futures products, they're priced to the spot market, right? And then the surveillance is the same way that BlackRock can do the surveillance as well with NASDAQ and Coinbase and all these other exchanges. So we think it's going to happen. We think it's going to get the approval, and it's really going to be a great benefit for the crypto markets.
I mean, Larry Fink's U-turn, I'm going to call it, has not been lost on many. And the fact that ultimately, I'm sure, his about-face on the infrastructure behind crypto is probably in large part because his clients want it.
Yep.
Talk to us about whether that institutional demand is really there, because that's what you hear a lot from the crypto space, but then we're just trying to see the data, basically.
We do think it's there, and I think that is why all these asset managers are getting into it. And it's also, you don't want to be the asset manager that didn't spend the investment, the time, and the resources to offer crypto service to your clients. And if a bull market returns and then you're not offering those services, your clients are going to go to another asset manager. So, we've estimated that just on the Bitcoin side for the ETF, there's roughly between $50 to $80 billion of demand for a spot ETF. So, and I think that, that's going to continue to increase as well. So there definitely is a lot of demand. It's not just custodying and holding asset and being able to buy it in a regulated way. There's all these other services, trade services, prime brokerage. So the opportunity for asset managers and banks to offer like a wedge for their clients to get access to it. But then even think about ETH. ETH is pretty complicated because if you offer an ETH ETF, there's staking, right, that's involved. So how does that work for clients, and how do they measure their returns on that and all that? So there is a lot of client demand.
Very quickly, where does the money get apportioned? To the startups or to Bitcoin and ETH?
Oh, that's a difficult question. I think it's different because venture investors are the one that is investing in the startups. They're not really buying ETH and Bitcoin, maybe a little bit, or maybe like through like foundations and stuff that they invest in. But for the most part, we think that, like you said at the beginning of the segment, is that a lot of dry powder in the crypto space exists. We know A16Z, they had the $6.5 billion fund that is still a good amount of capital left in that fund. And there's these other funds that they raised. That's their fourth crypto fund, by the way. So all of that capital is going to go to the startups. And then I think for Bitcoin and ETH, you're going to see more of the traditional asset managers and all that, investors that would buy into Bitcoin and ETH and some of the more strong alternative tokens.